On February 3, 2022, one company lost more than $230 billion in just a single trading day. Not because of a recession, not because of a financial crisis, not because of a global pandemic. Instead, the biggest one-day collapse in the company's market value came from one decision. A decision made by one man. For nearly 2 decades, Mark Zuckerberg had built Facebook into one of the most powerful companies on Earth. But then, he decided to bet the future of his empire on something almost nobody truly understood. The Metaverse. Wall Street laughed, investors panicked, employees questioned the future. And overnight, Meta became the symbol of one of the most controversial corporate gambles in modern business history. Many believed this was the beginning of the company's downfall. But what happened next shocked everyone, because this isn't just the story of how Meta lost hundreds of billions of dollars. It's the story of how one decision nearly destroyed a trillion-dollar empire, and how that same company found a way back. Before there was Meta, there was Facebook, a company that had already accomplished what most businesses could only dream of. Founded in a Harvard dorm room in 2004, Facebook wasn't just another social media platform. It quickly became the digital town square of the internet. By connecting billions of people across the globe, the company transformed the way the world communicated, shared news, built businesses, and stayed connected. Every new user made the platform more valuable. Every new advertiser made the company richer. And every passing year widened the gap between Facebook and its competitors. Then came Instagram. When Facebook acquired Instagram for $1 billion in 2012, critics called it one of the most overpriced acquisitions in Silicon Valley history. Years later, it would become one of the smartest business decisions ever made. Next came WhatsApp, another massive acquisition. Another platform added to Zuckerberg's growing empire. Soon, billions of people were using at least one Meta app every single day. Money poured in faster than almost anyone could imagine. Advertising revenue exploded. Profits reached record highs. Investors couldn't get enough. Wall Street viewed Facebook as one of the safest companies on Earth. By 2021, Meta's market value had climbed past $1 trillion, placing it among the most valuable companies in history. From the outside, it looked unstoppable. But behind the scenes, something had changed. Mark Zuckerberg had already started thinking beyond social media. He believed the next technological revolution wouldn't happen on a phone. It would happen inside an entirely different world. A world that didn't even exist yet. That belief would become the most expensive gamble of his career. October 28, 2021. Millions of people tuned in, expecting Facebook's annual developer conference. Instead, they witnessed one of the boldest rebranding decisions in corporate history. Mark Zuckerberg walked onto the stage with a simple message. Facebook would no longer be Facebook. From that day forward, the company would be known as Meta. The announcement shocked the business world. For years, Facebook had dominated social media. Now, Zuckerberg was telling investors that social media was no longer the future. He believed the next generation of the internet would be something entirely different. The Metaverse. A virtual world where people would work, attend meetings, shop, play games, and socialize using virtual reality. According to Zuckerberg, this wasn't a side project. It was the next chapter of human interaction. Meta wasn't just changing its name, it was changing its entire identity. To turn that vision into reality, the company began investing at a breathtaking scale. Billions of dollars flowed into reality labs, thousands of engineers were hired, new hardware was developed, virtual reality headsets became the company's new priority. Every quarter, the spending grew larger, and so did the expectations. Zuckerberg wasn't asking investors to believe in an existing product. He was asking them to believe in a future that hadn't been built yet. It was one of the largest corporate bets ever placed. Some admired his long-term vision. Others saw something far more dangerous. A CEO risking one of the world's most valuable companies on an idea with no guarantee of success. Then, the numbers started coming in. Reality Labs reported billions of dollars in losses, quarter after quarter, year after year. Yet Meta continued investing, confident that today's losses would become tomorrow's revolution. But Wall Street was beginning to lose patience, because while Meta was chasing the future, its core business was quietly starting to crack. And that problem would soon become impossible to ignore. While Meta was pouring billions into building the future, its present was quietly falling apart. For years, Meta's advertising business had been almost unstoppable. Every click, every like, every interaction generated data that helped advertisers reach exactly the right people. It was one of the most profitable advertising machines ever created. Then, Apple changed everything. In 2021, Apple introduced app tracking transparency, giving iPhone users a simple choice. Should apps be allowed to track your activity across other apps and websites? For the first time, millions of users could simply tap. Ask app not to track. Most of them did. Almost overnight, Meta lost access to a massive amount of advertising data that had powered its business for years. Personalized advertising became less effective. Campaign performance declined. Businesses spent less. Revenue growth slowed. And investors immediately noticed. But Apple's privacy changes weren't Meta's only problem. TikTok was growing at an incredible pace. Younger audiences were spending less time on Facebook and Instagram, more time scrolling through short-form videos. For the first time in its history, Meta wasn't just defending its business. It was fighting to stay culturally relevant. Then came the earnings report. The numbers disappointed Wall Street. Revenue growth slowed dramatically. User growth stalled in key markets. Reality Labs was burning billions of dollars every quarter. And there was still no clear timeline for when the Metaverse would become profitable. Investors suddenly began asking questions they had never asked before. Had Zuckerberg become too obsessed with the Metaverse? Was Meta spending too much, too quickly, on a future that might never arrive? Confidence started disappearing. Once confidence disappears on Wall Street, everything else can disappear with it. Then came February 3rd, 2022, a day that would rewrite financial history. February 3rd, 2022. Wall Street wasn't expecting a disaster. It was expecting another earnings report when Meta released its quarterly results after the market closed. The numbers looked disappointing, but it wasn't just the revenue that shocked investors. For the first time in the company's history, Facebook reported a decline in its daily active users in one of its core metrics. It was a small drop, but on Wall Street, small changes can destroy billion-dollar expectations. The company also warned that Apple's privacy changes were expected to cost Meta around $10 billion in revenue that year. Reality Labs continued to lose billions of dollars. Growth was slowing, costs were rising, and investors were no longer convinced that Zuckerberg's Metaverse vision would justify the enormous spending. Within minutes, selling began. Then the panic spread. When the market opened the next morning, Meta's stock collapsed. Shares plunged by more than 26% in a single trading session. In just a few hours, more than $230 billion in market value had disappeared. It wasn't cash vanishing from Meta's bank account. It was something just as important: investor confidence. The collapse instantly became one of the largest single-day losses in market value ever suffered by a publicly traded company. Financial news outlets around the world led with the same story. Headlines described it as historic. Analysts questioned whether Zuckerberg had taken the biggest strategic gamble of his career. Some investors openly wondered if Meta's best days were already behind it. The company that had once looked untouchable now looked vulnerable. Inside Meta, the pressure was enormous. Employees watched the value of their stock-based compensation shrink. Morale dropped. Confidence faded. Outside the company, competitors sensed weakness. Wall Street wanted answers. And for the first time in years, even Mark Zuckerberg's leadership was being questioned. It seemed as though the empire he had spent nearly 2 decades building was beginning to crack under the weight of its own ambition. But while the world focused on the collapse, Zuckerberg was already preparing his next move. One that would determine whether Meta became another cautionary tale, or one of the greatest corporate comebacks in modern business history. By the end of 2022, the optimism surrounding Meta had almost disappeared. The company's stock had fallen by more than 70% from its peak. Billions of dollars had been erased. Investors were demanding change. Wall Street no longer wanted promises about the distant future. It wanted results. And for the first time in years, Mark Zuckerberg listened. In early 2023, Meta announced one of the largest rounds of layoffs in company history. More than 21,000 employees would eventually lose their jobs as the company dramatically reduced its workforce. It was a painful decision, but it marked a complete shift in strategy. Zuckerberg called it the year of efficiency. Projects were canceled. Management layers were removed. Spending was brought under control. The message was clear. Meta wasn't abandoning the future, but it could no longer afford to ignore the present. At the same time, a new technological revolution was beginning: artificial intelligence. While the world rushed to embrace generative AI, Meta moved faster than many expected. The company invested heavily in AI research. It released powerful open-weight language models. Recommendation algorithms across Facebook and Instagram became significantly more effective. Advertising performance improved. User engagement increased. Investors noticed something they hadn't seen in a long time: discipline. The same CEO who had been criticized for spending billions without restraint was now being praised for cutting costs while investing in technologies with more immediate commercial potential. Quarter after quarter, Meta's financial results improved. Revenue returned to growth. Profits recovered. Investor confidence slowly came back. Then, something almost nobody predicted happened. The company that Wall Street had nearly written off began climbing back toward the top. Meta once again became one of the world's most valuable companies, not because the metaverse suddenly succeeded, but because the company proved it could adapt when reality demanded it. When people look back at Meta's history, most will remember one number: $230 billion. A number that became a symbol of one of the most dramatic single-day losses in corporate history. But numbers alone never tell the full story. Because this wasn't simply the story of a stock crashing, it was the story of conviction. Mark Zuckerberg believed the future of computing would move beyond smartphones. He was willing to risk billions of dollars and his own reputation to build that future. Was the timing perfect? Probably not. Did Wall Street overreact? Many believe it did. Was the metaverse vision enough on its own? Not yet. But history has shown something equally important. Great companies aren't remembered because they never make mistakes. They're remembered because of how they respond when those mistakes threaten everything they've built. Meta survived because it did what many companies fail to do. It adapted, it cut costs, it embraced a new technological wave, and it rebuilt investor confidence one quarter at a time. The company that many believed was entering its final chapter simply started writing a new one. And maybe that's the biggest lesson every entrepreneur, investor, and business leader can take from this story. The greatest risk in business isn't making a bold decision. It's refusing to change when reality proves you wrong. Because in the boardroom, confidence builds empires. But adaptability is what keeps them alive. If you enjoyed this documentary and want to uncover the hidden stories behind the world's biggest companies, subscribe to Boardroom Files. Thanks for watching, and we'll see you in the next file.